Good morning, trading world. It is March 9th, 2023, just after 8:07 a.m. on the East Coast. And this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook: the Fed has us watching data drops closely. Will good news be bad or bad news be good? I just want to highlight something that I thought was really funny to me. Before Fed Chair Powell spoke on Capitol Hill Tuesday, the Fed Watch tool was like 60 plus probability to raise just 25 basis points. This was at 60, and actually the Fed Watch 2 was flip-flop. This probability was here, and this probability was all the way down here. And in one day, we had a complete swing and then some the other way. Now there's a 76.4% probability of raising more than 50 to 75 basis points. And it was just crazy to see the swing like that. And I keep warning people, stop trying to get ahead of the Fed. With the cost of money increasing, there is no way stock prices can stay at the higher levels they have been at. No one seems to believe in fundamentals anymore. Yet the higher the cost of money goes, the more we have to get back to fundamentals in valuating companies. You can no longer continue to throw good money after bad, investing in companies that don't make money now and don't have a clear plan to profitability in the near future. Right now, professional money managers and retail alike keep chasing pretty charts and momentum, and eventually it will backfire. The backfire will be the slow unraveling of all these overinflated companies. For example, one of the shorts that I had this week, I was short 100 shares of Starbucks from the 105, and I've been holding that for maybe a month or so. I held it through some pain, but shorted at the 105, and it finally came in this week. We had days where I probably should have taken it beyond, but I held it, a little longer than I should have, but it still has come into fruition. And it's going to happen to a lot of companies. It's just the nature of the business that when the inflation of the dollar happens, yes, we see inflated values on companies. But when the cost of money goes up and it deflates the value of the dollar, that deflation in value has to come out of equities as well. Believe it or not, today, based on implied vol, is supposed to be a calm day. I am still waiting on my blow-off top type rally where VIX rises with price action. However, I am coming to the realization that the market is just not ready to dive off the cliff just yet, based on the monthly time frame. We may get a bounce and stay sideways a little longer than I thought. I kind of see this week playing out with a revisit to lows, maybe today, maybe overnight, and ending the week with a strong bounce. Things are really hard to see in this cloudy period of the monthly, weekly, and daily time frames at their so-called rested areas. I will be focused on a drop overnight based on CPI and PPI in the European markets that could have us wake up to a decent sized gap down that could possibly begin to mend itself during the cash market or vice versa. That brings us to the key levels of the day. All right, here we are with the key levels of the day. Starting on the support side, we have our Jack support at 397 to the 396 area. Queen support 395 to the 394 area. King support 393 to the 390 area. And I must warn about a possible spike down toward the 389 area. Now, on the resistance side, we have our Jack resistance at the 398 to the 399 area. Queen resistance 400 to the 401, which is highly important. Rejection off of this area is on the weekly time frame, kind of keeps us in this downward trend type mind frame. And then we have the King resistance area at 404 all the way up to the 411 area. Definitely, again, this 404, 405 area holds a lot of weight as rejection. But if we get through it, there's a wide open air pocket that we could kind of turbocharge through. All right, the main thesis for today is supposed to be bullish bias, closing above the 398.92 with a projected target high of between 399 and 405. Give me just a moment to correct something here. Okay. Where was I? The main thesis for today. Bullish bias closing above the 398.92 with a projected target high of between 399 and 405. The alternate thesis is bearish, closing below the 398.92 with a projected target low of between 398 and 391. I do want to warn about a possible spike down coming, maybe not today, maybe today, but we may get this spike down to the 389 area. Again, the target low was between 398 and 391. It's important to remember the main channel we are in is from 397 up to 416. The main channel below us is 397 down to 379. Yesterday, market strength and better gapped up and continued up through mid-morning before reversing and becoming range-bound on the day. I expect strength to open almost even or a little lower with yesterday's close and be range-bound on the day with a little more bullish tilt to it. However, we have a slight dissonance or harmony depending on how you want to look at it, because the technical side, we were at a 50-50 bias on the technical side, but it's getting more bullish or leaning more bullish on the technical side. And we have a bullish bias on the quant side as well. today's one of those days where my spider senses or trader's intuition is warning me to be very, very, very careful. Oftentimes I talk about the alternate thesis, and when too many people are leaning on one side of the boat usually turns over. And we have that situation right now where we could get that alternate, that more explosive alternate thesis because we have more people leaning on one side of the boat. That 399 all the way to 400, 401 area, it holds a lot of weight. There are a lot of people that are leaning bullish, but that area could change a lot of people's minds very quickly, rejecting from that area. So you want to be very, very careful today. I am looking for a place to get short today, in projection of what I see as some trouble overnight. So that 401 area seems like a good place for me to find that short. Before I go into the scenarios of the day, I need to warn as well that it is not beyond the realm of possibilities to see a strange event today or tomorrow where we get a midday drop that ends in a sharp V-spike reversal. This is what I'm saying. My trader's intuition, spider senses, whatever you want to call it, is tingling right now. So I want to be extra careful of a sharp drop right now. So I am still holding some running positions, short positions that I kind of rolled out and took profit on earlier, and whatever's left in them, whether I lose it or not, it doesn't bother me because I've already profited from those positions. I did something, or I talked about this on a pre-market a week or two ago about how to hold runners in markets like this when it's really dangerous. And that's what I'm continuing to do. In a way, kind of having positions pay for themselves. All right. Let me bring up the scenarios of the day. All right, here we are with our first scenario, and seemingly most probable scenario. However, as the morning wears on, probabilities are wearing down. We could get our trend day down, meaning we open gap down and start with a push back toward the previous close, represented by the blue line. We find, okay, sorry about that, I had to correct a mistake here. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support. And here's where things kind of appear, or where we may get one of these one-off events today or tomorrow. And that one-off event could be where we could get, instead of our midday chop, we could get something like this. And that would be a V-spike reversal down from a good ways, giving us that spike down towards that 389 area. So I can't really see, just with anything in trading, you don't know when, but you have to prepare yourself for the possible outcome that may happen. And that's what I do, because I'm a visual person. I like to kind of prepare myself for things happening visually. It's not really a prediction, it's more probabilities of things that can play out so that I'm prepared for it when it does happen. So that's something to be prepared for on the trend day down. All right, our second scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area, find midday chop around either the Queen or King resistance before going back down with the same energy or force we went up with the first part of the day. Again, I'm going to prepare for a one-off event where at some point we could get a very sharp V-spike reversal that looks something like that. So bouncing off, or we get that rejection at that 400, 401 area, and we could really go for a ride. So that's something I'm just kind of preparing for in the back of my mind. All right, that's the rounded reversal and that one-off event. All right, our last scenario is going to be our expanded range day structure. We could begin the day with a good push up off of jobless claims, news event, and at some point, energy and momentum fades and a reversal happens. I also, again, want to prepare for a one-off event where we could see the rejection off of this 400, 401 area to be that V-spike reversal. So these are the things that I'm preparing for. I know people may think I'm crazy, but when you do this for so long and you kind of see that there's a void in fear and VIX, and complacency begins to take place, and the worst things happen in the midst of that onset of complacency. So it's just something I can't really, and then I've talked about the cloudiness right now and what brings about that cloudiness, and it's just the perfect storm for something like this to happen. So again, I'd rather be paranoid and prepared than not prepared. So again, I hope this helps. Your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in the positions that we take, and we manage that risk in accordance to our account size. Something that I've been harping on the last couple of days, risk is being prepared for risk is not just managing positions. It's also managing situational awareness. I talked about it with the football analogy. If it's 3rd and 1, let's not waste time trying to throw a bomb. Let's get the first down. And that situational awareness kind of tells me in this complacent moment, knowing how the technicals act right now, where we could see that huge range, that huge consolidation on those large time frames, is to be prepared for spikes to the downside right now. Be prepared for grind and pushes to the upside. So again, being risk prepared or risk averse is not just stops on a position or the size of a position. It's being aware of where you are situationally and preparing yourself, preparing your portfolio for those spikes. So again, I hope this helps. Wishing you a positive trading day. I got a little long-winded today, but as always, wishing you a positive trading day. Let's go out and make it a great one.